There's a body of water about 21 miles wide at its narrowest point. It sits between Iran and Oman. And right now, today, it is the single most important 21 miles on planet Earth for your portfolio, because through that water flows 31% of all the oil shipped by the sea globally. And right now, there are 2 US aircraft carrier strike groups sitting near it. Iran is conducting live military drills inside it. And Russia just announced joint naval exercises in the adjacent waters. And the US has told Iran, get a deal done by Thursday or else. So this is not a crypto story today. This is not a gold story. This is not a tariff story. But here's the thing, at the same time, it's all three. And if you don't understand how they're all connected right now, you're flying blind in these markets. Not to mention your actual safety is probably and very likely at risk. So today I want to map it all out for you, so you know what's going on and how everything connects and how to think about what's happening right now. Hi, I'm Jess. This is Crypto by Jess. And without further ado, let's get into it. All right, so let me set the scene. The Strait of Hormuz is a narrow channel between Iran and Oman, basically the only exit point for oil coming out of the Persian Gulf. Saudi Arabia, UAE, Kuwait, Iraq, Qatar, all of their oil has to pass through this bottleneck to reach the rest of the world. We're talking about roughly 13 million barrels of crude oil per day transitioning through that strait in 2025, about 31% of all global seaborne crude. So let that sink in for a minute. Nearly a third of the world's shipped oil through a channel 21 miles wide at its narrowest point. Now imagine what happens to energy markets and therefore inflation if that channel gets disrupted. Oil would spike, energy costs would spike, inflation would spike. The Fed would not be able to cut rates, and risk assets, including crypto, would get crushed. That's why the Strait of Hormuz is basically a pressure valve for the entire global economy. And when it's calm, you almost forget it exists. But when it's not, like right now, every asset class feels it. And that's exactly what's going on right now. So let's walk through what has happened in the last few days, because things are moving so fast right now. About 10 days ago, Trump publicly said he would decide whether to strike Iran in the next 10 to 15 days if no nuclear deal was reached. He had 2 aircraft carrier strike groups dispatched to the region. This was the largest U.S. military buildup near Iran since the Iraq War in 2003. And on February 6th, the US and Iran held their first round of indirect nuclear talks in Muscat, Oman. They made essentially no progress though. Both sides agreed to keep talking, which is at least good because it means no military action will be taken. But we're still in suspense. Okay, now fast forward, we're back in time right now, okay? February 18th, we saw the second round of talks in Geneva, Switzerland, and Iran reportedly offered to suspend uranium enrichment for 3 to 5 years. However, the US obviously wants permanent, full dismantlement of their nuclear program in what they're calling zero enrichment. So you can see the gap between the two positions at the table, at the negotiation table between Iran and the US is enormous. On the one hand, you have Iran saying, okay, fine, we'll give up our toy just for a minute. And then you have the US on the other side of the table saying, no, you can't have the toy at all. And then we fast forward a few more days. On February 21st, Iran's president gave a live televised speech saying Iran would not bow its head to pressure. Typical ego, right? But the very next day, Iran's foreign minister went on CBS News and said a fast deal was possible and that the two sides had agreed on guiding principles for a framework. So we have this very strange diplomatic dance happening where Iran is simultaneously projecting strength domestically and signaling flexibility internationally. And then on February 22nd, Iran announced live military drills in the Strait of Hormuz and joint naval exercises with Russia in the Gulf of Oman. And then the next day, February 23rd, yesterday, Iran's supreme leader, Ali Khamenei, issued a stark public warning. And his words were, I quote, "More dangerous than aircraft carrier is the weapon that can send it to the bottom of the sea." And as of today, February 24th, a third round of talks is scheduled for Thursday in Geneva. U.S. officials have privately told reporters this is likely the last diplomatic chance before Trump orders military action. Iran is still working on its written proposal, and political leadership in Tehran has not signed off yet. So we are right now still in suspense, still at a fork in the road, and this is why we must continue to pray for wisdom and grace and just literally like divine intervention, because the whole world will be affected, whatever happens here. That said, let me get into the actual underpinnings, okay, nuts and bolts of what they're actually negotiating. For starters, we know that Iran's nuclear program has been the flashpoint of Middle East geopolitics for 2 decades. And last year, Israel, with US support, struck Iran's nuclear facilities, remember? And the strikes were described as having obliterated the program, quote unquote, at least temporarily. But Iran rebuilt, of course, or started to. And the international nuclear watchdog, known as the IAEA, had previously confirmed Iran was enriching uranium to levels approaching weapons grade, about 60% purity, when weapons grade is 90% purity. I can do a whole deep dive on this if you're interested, because I'm frankly a little interested also on how this whole nuclear surveillance program works. Anyway, the US's demand, on the one hand, is stop enrichment entirely, permanently. Iran must have no pathway to nuclear weapons ever. And then Iran's counter, position is we have the right to civilian nuclear power under the Non-Proliferation Treaty. We'll accept limits, we'll accept inspections, but we'll not give up enrichment forever. And you want to think for a second, maybe that sounds reasonable because everyone has rights, right? But no, not when it comes to having the power to obliterate a whole chunk of the planet. Like that should not fall into the category of national rights, because as a nation, you are part of the bigger pie, of the bigger picture, which is the world. Anyway, Iran reportedly offered to suspend their enrichment 3 to 5 years, and that offer would expire after Trump leaves office, which is why, thank God, the US is skeptical, because they don't want to sign a deal that basically just kicks the can down the road and puts the US and the whole world at risk once Trump leaves office, because we're not a dictatorship, we're a democracy. So I'm frankly, personally grateful and happy that we have a president and an administration, whether you like him or not, on a personal level. I'm at least grateful that this administration is looking years down the road, right? Because in past administrations, different presidents have just been doing whatever they needed to do, like patchwork during their term. But that is what has caused so many problems, right? Because then the next president has to step in and fix those problems, even though they didn't make them. Anyway, Iran is also demanding sanctions relief, which is kind of funny, kind of ironical, because if you're doing something malicious, typically one would say you're not in a position to ask for favors, right? Like, stop hurting everyone, stop being malicious, right? And then maybe, you can ask for some sort of support or favor. But that's not the way negotiations work. But anyway, yeah. So what they're asking for is they basically want to have their economy be reconnected with global markets, right? And that would be wonderful for them. So knowing Trump, right, it would be great if they found a way to negotiate, right, like favorable terms, reconnecting Iran with the global economy, which would help them all so much in return of just putting this nuclear program to sleep. But what makes all of this even more complicated, okay, just so you have an idea on what's going on, is that as this conversation is happening, where Iran wants to come back to the, global marketplace, at the same time, Okay, Iran is conducting joint military drills with Russia right now. They reportedly signed a 589 million arms deal with Russia. So the Russia-Iran axis is getting tighter as both countries face Western pressures, which is also, I would say, not that I'm a diplomat, though I thought of being a diplomat in my earlier years. What's interesting is that we're basically pushing them together, right? If you make this person an enemy, and then you make this person an enemy as well, and you won't let them into the club, well, what are they better off doing? They're better off uniting forces, right? Because they're both left out of the party. So that is what's happening with Russia and Iran, and that's why they're joining forces. So it would be very interesting, and I hope Marco Rubio is negotiating with both favorable terms so that they come back to the table, because I know Russia initially wanted to join, was it NATO? And they were refused, which is why they were so angry when Ukraine was being allowed to join, right? Because they're like, hey, what's the deal? Anyway, that's a separate conversation. Let me know if you'd like me to go down that rabbit hole some more. But I just hope that for purposes of peace, and I imagine so because we have a very skilled administration, I hope that they're able to bring both Russia and Iran to the table through lifting sanctions. But they both have to also agree, right, to disarmament, that's a complicated word to say, of their nuclear weapons, because that's not good for anybody, not even them, right? Like if they blow the US off the face of the planet, that's not good for them either. Then they're left on a planet with no US and a war zone, and it's going to cause chaos, and it's going to affect their markets, and it's going to have ricocheting effect because we're all connected. So I hope they're able to see how this is not good for them either in the long run. Anyway, so we have to keep our attention on Thursday with these talks in Geneva, peace talks in Geneva, because that will be so decisive, and I will be covering what happens closely here on my channel. But now that you understand the geopolitical setup of what's going on, let's connect the dots as they pertain to the markets, because this is where it gets really interesting. First, regarding oil and inflation, okay? Any disruption to the Strait of Hormuz is immediately inflationary. This is what you can expect. If things don't go positively, okay, we could see oil prices spiking, energy prices spiking, and suddenly the Federal Reserve, which has already been cautious about rate cuts, has a reason to stay restrictive even longer. And restrictive monetary policy is the enemy we know of risk assets. Stocks would suffer, crypto would suffer, liquidity would contract. And then, as things pertain to gold, we know that gold has been the clearest winner from this entire environment. Okay. It's trading around $5,150 per ounce right now, up about 17% since January 1st. And why, if you're even wondering, is simply because gold has been around the longest as a protection, as a hedge against risk and uncertainty in the market. So we know gold loves exactly this combination of events, of situation, of geopolitical uncertainty, of dollar weakness, of inflation fears, and the possibility of rate cuts. Iran risk with what's happening there right now is literally a gold tailwind. Every time headlines escalate, you see safe havens flow into gold. And central banks have been buying gold in record quantities, 863 tons last year, specifically because they're diversifying away from the dollar. The dollar itself, we know, is weakening, partly because of the tariff chaos and partly because of foreign investors and their increasing reservation about U.S. policy predictability. So gold is telling us something important. It's saying the world is reordering itself and traditional safe havens are being repriced higher. But okay, how do things pertain to Bitcoin? We know that Bitcoin is down 24% year to date, down 19% in just February, which has been its worst month since June of 2022. Back when remember the whole Terra USD collapse, and that took half of the industry with it. But here is what is very interesting about this moment in time as well. Bitcoin's price action actually looks nothing like digital gold. It looks like a high beta tech stock. We know it's not being treated as it really is. And when Iran headlines spike, money flows into gold, not Bitcoin. And when tariff uncertainty rises, money flows into gold, not Bitcoin. Why? Because most institutional investors today are legally required to classify Bitcoin as a risk-on asset. Their compliance frameworks, okay, their fund mandates, their risk committees, they've all been built around treating Bitcoin like a speculative technology bet, not like a store of value. Not yet. So when macro risks increase, they reduce exposure naturally to risk assets. And Bitcoin gets sold alongside the NASDAQ, not bought alongside gold. And this is not a statement about what Bitcoin fundamentally is. Remember that. It's a statement about how it's currently being treated based off of the current understanding of the institutions and that distinction, okay, between what something is and how it's operationally being treated is perhaps one of the most important concepts in understanding where we are in this moment in time in Bitcoin's adoption cycle right now. That said, we know that at the same time, the regulatory infrastructure is being built, it's being laid out, it's being negotiated. We have the Genius Act and the Clarity Act and the stablecoin frameworks within them. That's what changes the operational treatment over time, but we're not there yet. And just as a quick refresher, remember that just 4 days ago, February the 20th, the Supreme Court ruled 6-3 that Trump's sweeping tariffs under the IEEPA were unconstitutional. Remember, the court said Congress holds taxing authority, not the president. And we know that within hours, Trump imposed a new 10% global tariff under a different legal authority, Section 122 of the Trade Act of 1974. And by Saturday, just this last weekend, he raised it to 15%. And those tariffs took effect this morning, February 24th. But here's the connection to Iran. The Section 122 authority allows tariffs when the U.S. has large and serious balance of payments deficits. And most economists think this legal justification is shaky for the current environment. So we can expect legal challenges. And we know that the tariff chaos is weakening the dollar too. Foreign investors are pulling back from dollar assets. And the dollar index, we see, fell on Monday as markets processed the news. A weaker dollar means higher gold prices. Higher gold prices signal de-dollarization concerns. And de-dollarization concerns drive central banks to buy more gold. More central bank gold buying pushes prices higher. So this is a reinforcing or vicious cycle type loop. Now, if we add into this vicious loop, this big picture, the whole Iran situation, if a military conflict erupts, we know oil is going to spike. The global supply chains will be disrupted and inflation will accelerate. So the Fed would be stuck and the dollar credibility would further erode, all of which point to the urgency and need of the US stablecoin policy, specifically the Genius Act, since it was explicitly designed to extend dollar dominance through digital rails, remember? The idea being, even if the physical dollar weakens in the world, right, because the petrodollar is unpegging, we could still have a scenario through the Genius Act and hopefully the Clarity Act where dollar-denominated stablecoins can embed the dollar, save it, right, and embed it deeper into the global digital transactions. And China sees this. That's why Chinese state media has been calling for yuan-backed digital currencies to accelerate. So we also have a digital race, a digital currency race alongside the AI race, which is a separate topic. And that's why China is reducing its enthusiasm for US treasuries, which is another pawn on this chessboard. So the tariff story, the Iran story, the gold story, the dollar story, and the crypto story are all the same story viewed from different angles. And the underlying theme, well, the global monetary order is being stress tested in real time. And we feel the effects of it literally in our portfolios and in the market because every asset is responding to this stress in its own way. We see it in gold, we see it in Bitcoin, we see it in the crypto market, of course. But okay, where does this go from here? Let us talk about what happens on Thursday. Because if Iran presents a credible written proposal on Thursday in Geneva and the US finds it workable, we could see a rapid diplomatic thaw. Okay, things could cool down. Oil prices could cool, gold could give back some gains, and risk assets, including crypto, could potentially stabilizing. However, If on Thursday in Geneva we see a no deal scenario, which would really shock me, but is possible because we are talking about egos ultimately negotiating. That's what's kind of ultimately on the table here is people need to find a way to deal with changing their minds and being wrong or appearing weak. So, if these talks collapse on Thursday, or if Iran's proposal is rejected, the window for military action would open up. Because remember, Trump has said all options are on the table. And his advisors, Witkoff and Kushner, his son in law, have been urging him to be patient. But Trump, we know, is a doer, and he can change course at any moment, which has been his style. He likes the surprise attack. Remember what he did what he did to Maduro in Venezuela. And even what's going on in Mexico right now, which is not far from us right now. I actually have quite a bit of family in that area. I'm not Mexican though. Okay. Anyway, the point is a military strike on Iran would be an immediate macro shock. Oil above $100 is something we could see. We could see gold pushing to new all-time highs. We could see a scenario where equities go down hard and crypto, because it's currently treated as a risk asset, likely would also sell off in the initial panic, even though a stronger long-term argument for sound money would eventually benefit Bitcoin. And the middle path, okay, if we don't have the best case scenario where Iran comes with a reasonable proposal, and if we don't have the worst case scenario where Iran says no deal, the middle of the road path, which is very likely, could simply be we go into a prolonged diplomatic limbo time period where these diplomatic talks would continue past Thursday and military action would stay on the table but wouldn't happen right away, at which point markets would stay on edge but wouldn't break decisively either. And in this kind of an environment, okay, the gold bid would stay elevated, Bitcoin would stay under pressure still until the macro environment clarifies itself, and the structural regulatory build out of crypto infrastructure would continue quietly as it has been behind the scenes. So, the key dates to bookmark and to be looking out for are this Thursday, February 26th. Geneva talks will be around 3 p.m., so watch this closely. And then perhaps most importantly would be tonight. Trump's State of the Union will be tonight. He will almost certainly address Iran, tariffs, and possibly crypto. We know the market will react to this one way or the other. And then coming up soon on March 31st, okay, so like a week away, Trump has a planned trip to Beijing. This will be the US-China trade reset meeting. And then fast forward into July of this year, on July 24th, the Section 122 tariffs that Trump invoked once the Supreme Court ruled his Liberation Day tariffs unconstitutional, remember? He reinvoked this Section 22 law. Well, that will expire on July 24th, unless Congress votes to extend them. But okay, as we close out today's video, let me leave you with this framing, because I think it's the most useful way of juggling and handling all this information and uncertainty. First off, it's important to remember we're simply living through a stress testing moment across multiple systems that run the world right now. We are officially going through what Ray Dalio has been talking about forever in his book. We're going through a world order reset. It's as if you're playing poker and you have to shuffle the cards, right, for a new game. Well, we're in the shuffling of the cards. We're going into a new game. So that's what's happening. We see the US-led global trade order being stress tested by tariff chaos and the SCOTUS pushback. We see that the dollar reserve currency dominance is being stress tested as well by de-dollarization, central bank gold buying, and stablecoin competition. And then we have the Middle East geopolitical stability being stress tested as well through this Iran nuclear standoff and the Russia-Iran axis. And then, of course, we have the crypto market itself, the new player on the team, also being stress tested by exactly this kind of macro environment, which ironically, it was theoretically designed for, but it hasn't yet operationally proven itself, or rather the other players don't really know what crypto is and Bitcoin is yet. So all very natural and just part of being alive and growing, right? The world and the market is also evolving. So the interesting thing about stress tests is that they reveal the truth about systems faster than the calm periods ever could. So it's like when the dust settles We get to see what's really on the table. That's what we have to wait to see what happens. So, as things pertain to Bitcoin, once again, we're seeing that even though Bitcoin is digital gold, okay, it hasn't yet been accepted this way by the world. So, it's not functioning that way yet, but I believe it will as people just start to learn more. And then, as things pertain to the infrastructure of crypto applied to the world and the financial world, we also see that we're in limbo. Okay, the regulatory, the institutional, the custodial systems of crypto being applied to traditional finance haven't been fully built out yet. However, gold in many ways is also telling us how ready the world is for Bitcoin once they learn about it. Because the price of gold is basically an index of institutional distrust in the dollar in fiat systems. And right now, it's at $5,150. So it's foreshadowing the need of the world for Bitcoin. That's the market saying. We believe hard money has value. We just haven't yet fully transferred that belief to Bitcoin. But that transfer is coming, I believe. The regulatory rails are being built, it's being negotiated. The institutional frameworks are being constructed, but it takes time. So we have to be patient. That is perhaps the most useful tool of ours as investors, is the ability to sit on our hands and be patient. So as we actually close out today, you might ask, okay, so what do I do with all of this? Well, what you do is you understand it, try to process it, and stop being surprised by headlines. You know why gold is up and Bitcoin is down. If you've been following my channel anyway, you would know. So I'd encourage you to go watch my last few videos because it all kind of pieces together. And if you have been, you know why Thursday matters. You know what to watch. That's the whole point of this channel, of my channel, is not to tell you what's going to happen, okay? But to give you a framework in understanding what's happening so you can make informed decisions yourself. So if today's video helped you connect some dots, then I would just ask you like the video and leave me a comment. Let me know what you're thinking, what questions you have, and I'd be very happy to address them in upcoming videos. Anyway, I love you guys. Remember everything I said, okay? None of it is financial advice. It's educational content only. I love you, and I will see you here tomorrow. Take care.